Quiet trade on D Street with Nifty holding above the 24,100 mark with mixed moves on broader indices. IT is upbeat ahead of the key earnings while financials and real estate remain under pressure. And electronics manufacturing stocks surged after the cabinet approved a 62,500 crore mobile phone manufacturing scheme and 1.27 lakh crore under the Semicon 2.0. Dixon and Keynes lead the gains as the incentives are expected to accelerate the localization and boost component manufacturing. ABB India surges after the global parent reports healthy second quarter numbers with revenue up 14% and a steady growth in income backed by strong operational performance. Order inflow growth for India remains healthy at 80%. ICICI Lombard reported a 46% drop in profit as two large fire claims pushed up its combined ratio despite management signaling improving pricing trends. Meanwhile, ICICI Prudential and HDFC Life reiterated confidence in profitable growth, with brokerages remaining constructive on their long-term outlook.
MRPL reported sharp sequential improvement in profit aided by an exceptional gain despite weaker refining margins. Meanwhile, HDB Financial Services posted a 38% jump in profit on strong net interest income growth, while MV Photovoltaic more than doubled its quarterly profit on robust execution and margin expansion. IT services companies are set to report mixed first quarter. Wipro is expected to see pressure on margins from wage hikes and AI investments, with investors watching deal conversions and second quarter guidance. Meanwhile, Tech Mahindra is likely to post a strong quarter supported by telecom-led growth, improving margins and healthy deal wins.
Shares of Mrs. Bector's jumped after Abacus Asset Manager acquired around a 1% stake. Meanwhile, TVS Holdings gained after its subsidiary Home Credit India agreed to acquire 100% of Varthana Finance for 967 crore rupees. Shares of Ather Energy cooled after an early rally despite the board approving a 1,300 crore QIP. The fundraise, backed by fresh investments from Hero and the India-Japan Fund, will primarily fund R&D, expand manufacturing capacity and strengthen the company's balance sheet.
SBI Funds Management IPO continues to see traction, and on the third day as of 11 a.m., the issue was oversubscribed 4 times the shares of offer. Non-institutional investor segments saw highest bookings of nearly 10 times.
Hello and welcome. You tune into Buy Now Sell Now. I'm Ankita Saxena and with me is Ashish Advaryu. In the next 1 hour, we'll take all your questions and get them answered by our experts. Now, we will be joined by a fundamental and a technical expert. The number is going to flash on top of the screen, so you can write into us or call us and we'll get your questions answered. But before we get going with the show, let's take stock of how the market is shaping up at this point. Well, it's a quiet day on D Street today, even though we're managing to hold out in the green today. Nifty is trading with gains of 0.4%. We are at the highest point of the day as of now, as you can see on the charts. 24,160, 170 odd levels is what we are managing to hold on to. Nifty Bank is also trading absolutely flat as of now, though Nifty Bank is telling a different story. From the day's highs, it's down 141 points from the day's high, but nonetheless trading in the green, absolutely flat moves coming in on Nifty Bank. But let's pull up the charts for the broader end of the market. Mid and small caps, even the small cap was giving an outperformance. As of now, it is trading with gains of 0.1%. It has cooled off from those levels. Mid cap also trading with gains of 0.1%. So they are mirroring each other, and they are right now on the back foot, at least for now. The frontline index Nifty is now the outperformer. IT is also doing very well with gains of 1.5%. HCL Tech, LTI Mindtree, Persistent, TechM, Wipro, both large in the mid-cap spaces within the IT pack are adding legs to the rally in the IT today. On the back foot, we have the financial services, the banking pack, like I mentioned, today is on the back foot. So largely that is how really the market texture looks like at this point. But let's take a look at how the F&O universe also looks like. And for that, my colleague Sajid is now joining us with a snapshot from the F&O universe.
Thank you, Ankita, for that. The Nifty hovering around the 24,170 mark at this point in time. It's gained a bit in the last half an hour, 40 minutes, as we're seeing some pickup in shorts getting covered. So the open interest is down nearly 3.3% in today's trade, with the premium at nearly 20 at this time. The Nifty Bank also seeing some long positions getting added. Open interest up nearly 1.36%. It's flat as of now, but it was in the negative earlier. Look at the constituents. They're seeing some long build-up happening across some of the private sector banks, which is HDFC Bank, ICICI, SBI, Kotak. Long unwind happening at IndusInd, and shorts getting added in Axis and AU Small Finance Bank there. But it's the call and put writing which is more reactive, and put writers have become active in the last half an hour, where we have seen some additional open interest getting added to 24,100 and 24,200 strikes. And if you look at a distribution chart, you will see that 24,200 holds a very strong resistance there, while you're getting a good support coming in at 24,100, and so the index is around about 24,170 mark as we speak. Future gainers, ABB up nearly 8% after the global parent came out with update for the quarter, talking about the kind of order book increase for ABB there and ABB India. Swiggy is up nearly 4.5%, shorts getting covered, and Dixon is up 4% in today's trade after the Semicon 2.0, which was announced by the government. ICICI Lombard down nearly 11% on weak numbers. HDFC Bank is down, adding shorts to its open interest, and ICICI Pru is also down nearly 3.6%. Open interest gainers includes Lombard, 26% jump in open interest. ABB has certainly seen a spurt in open interest, 15% jump there, and Siemens is also seeing an open interest jump of 14.4%, which is coming in. Swiggy is seeing some short covering among the losers. Kalyan Jewelers are seeing some long unwinds at this point in time, and Tata Elxsi is seeing a short covering as we speak. But most active is Dixon. 15,000 July call, the stock hovering around 14 to 49 level, 1.18 lakh contracts getting added in the July call for 15,000 strike. That's one of the most active ones from the semiconductor pack today. But if you look at the put side, you have ICICI Lombard stock trying to hold off the 1600 levels as we speak. Open interest up nearly 4 lakh contracts. The premium sharply up to by 30 to 30 to 45, and the stock down as you speak, roughly around 200 odd points in today's trade. So the market's holding off. You're going to see some volatility coming in towards the second half. Bank Nifty is almost flat, and Nifty IT is what is the more outperformer today in the morning.
Okay, so that's everything that's happening in the world of futures and options. Sajid, thanks so much for joining us. But let's get going then. And this is a show where we answer all your stock specific questions, so keep sending them for us, and the number is flashing for you at the top of your screens. On the technical side, we are now joined by Forum Chedda, founder of Chart Analytics, and we also have Lancelot Dicuna, Chief Investment Officer, ValueX Wealth Connect LLP, now joining us. Thank you for taking your time out and joining us here on ET Now. But first question has come in from Prisha Malu, who has written to us from Pune. And she has a question on Mrs. Bector's Food Specialties, a stock that is up nearly 11 to 13% in trade today on the back of Abacus Investment Managers buying about 1.5 to 2% stake in the company. That stock anyway is up 13.5%. Now she has about 500 shares of this stock bought at 230. Now, despite the run-up that we have seen in today's trading session, the stock is still trading at 192, below the purchase price of Prisha at about 230. Long-term view is her question. What is the long-term view on this counter? But despite that, Forum, let me ask you first. What will your view be on Mrs. Bector's after the run-up that we have seen today?
Well, hi, good morning, and thank you for having me on the show. Well, to begin with, today the stock price has surged by nearly 13.5%, and this up move can continue towards the levels of around 207 to 210. Technically speaking, we require a good weekly closing along with this consistent increasing in volumes for the stock price to give a closing above 210, where the entire trend is can be considered a change of trend. So since she is looking at a long long-term perspective, it's fine to hold on to it and can closely watch out for these levels of 210. Any closing above such levels, she can continue to ride on to it. Otherwise, if it is showing some kind of profit booking, she can consider reducing her position because it can probably take some more time. So at this point, she can continue to hold on to the stock.
Okay, and Lancelot, what will your fundamental view be on Mrs. Hector's? Because Prisha has clearly said that she's a long-term investor. In that case, wanted your thoughts as well on this counter.
So, Mrs. Bector has a market cap of 5,900 crores and is basically engaged in the business of biscuits and premium bakery products. They have the Ceramica, the Cremica brand, and English Oven, and a couple of other brands. But if you've seen over the last couple of years, sales growth has not been very significant, more because there was earlier higher inflation. We've seen input costs, and so revenue growth has been a bit of a challenge for the company. And maybe this particular opportunity is, an opportunity where one can look at booking profits or exiting, because the stock is trading at 41 times earnings. And in the absence of, large growth, it's very difficult to see a huge growth coming in, or re-rating of this stock on the upward side.
All right, so that's the view coming in on Mrs. Bector's Food. That is in focus today with gains of almost 15%. But let's move on then and talk about the next question that's coming from Pawan. He's writing in, he says that he has AWL Agri and the entry price is 192 rupees, and he wants to know the future of the business prospects, the view for the next 3 years. Okay, Lancelot, let me come to you. If you have a view on this for the next 3 years.
So if you look at, this stock is basically AWL Agri Business was part of its Adani Wilmar dealing in edible oil and other FMCG products. And AWL is the new name of this company. And we have seen that it's trading at about 23 times its earnings. And, the EPS growth has been negative over the last year. I think going ahead, we are expecting that these challenges will still continue for the company. And so since there's not much of, improvement in the overall situation, unless the future outlook looks better, it's very difficult for a commodity-based business to trade at high P multiple. So this would be a, either exit or book profits if you are in profit at this time.
Okay, so that's the view coming in on AWL Agri. But let's shift focus then. Prasanna has written to us from Chennai and he has a question on BrainP Solutions. Now, he has about 1,800 shares bought at 230 rupees per share. And the question is whether he should continue holding on to this position or exit out. 230 is his purchase price. The stock currently at 213 odd levels. The viewer has not mentioned his time horizon. But Forum, let me ask you first, your view on BrainP Solutions?
Well, I think it has been one of the underperformers lately, and currently the stock price is also forming a good base near 207, 205 levels, and after that we are seeing more of consolidation to continue. According to me, the volumes are very much average. There hasn't been any accumulation happening, so the stock price can rally up to a level of around 223 to 225, where I would recommend to consider switching from the stock because it's been an underperformer, and there are many much more better stocks where there are decent volumes also and some momentum to be picked up. So I think it would be advisable to switch near the levels of 225.
All right, let's move on to a live phone query now. Avijit Dey is joining us from Kolkata. Hi, good morning, Avijit. Thank you so much for calling us today. Tell us what's your question.
I have bought 1,050 shares of Quality Walls at 36. So I can hold it for 1 year. What should I do?
Okay, Quality Walls.
Can I invest more?
Okay, so he can hold it for the next 1 year. Coming to you, Lancelot, he has Quality Walls that he can hold for the next 1 year. He bought it at 36. He's sitting at a loss right now. And of course, after the demerger from HUL, what are the prospects for Quality Walls, say, for the next 1 year? He's willing to hold it for that long?
Yeah, I think, post the demerger was expected to allow Quality Walls to focus on its own business rather than getting lost under the entire Hindustan Lever, bouquet of products and services. And with that focus, I think we are expecting to see some improvement coming in the company's operations, as well as, they announced setting up of new centers, and that should help in promoting their product. We have seen that the ice cream business for the last quarter, because of the extra, hot season extending till mid-June, they should do much better in terms of sales for the last quarter. But given that overall the trend also seems to be improving, I think the company is in a position to promote its brands very well, and that should spur sales, and the penetration into rural India will also help them increase their footprint. So I think one should look at accumulating this stock with a not really 1 year perspective. It may be difficult because they are in the process of transforming their business. But if one has a 3 to 5 year perspective, I think this stock should give you very good returns going forward.
Okay, so that's the view coming in on quality walls at this point in time. But on that note, we need to slip into a very short break. But you keep sending your queries to us, and we'll try to answer as many as we can over the course of the show. Stay tuned to ET Now.
Top of the world with Times Network. And you're watching ET Now.
In association with the all-new YONO, power to every Indian.
AU करंट अकाउंट के साथ मिलता है फ्री यूपीआई क्यूआर ओवरड्राफ्ट फैसिलिटी और एक ही ऐप से बैंक के सारे काम। AU
सोच बदलो और बैंक भी।
SBI Funds Management Limited launches an initial public offer of equity shares of face value of ₹1 each in the price band of ₹545 to ₹574 per equity share. Bid/offer opens on Tuesday, July 14, 2026. Closes on Thursday, July 16, 2026. For risk factors and other details, please refer to the red herring prospectus dated July 8, 2026. Read with the addendum dated July 10, 2026 to the red herring prospectus and the abridged prospectus available on the websites of the SEBI, the stock exchanges, the book running lead managers and the company.
Wow, so you use this trading app too?
Yes, because it promises guaranteed returns.
Guaranteed returns. Your trading app is authentic, right? Here's the catch. First, they promise guaranteed high returns with a grin. Then trick you to download a fake app and pull you in.
Well said! Well said!
SEBI and NSE advice. Download apps only from the verified apps list on SEBI's investor site.
NSE द्वारा निवेशकों के हित में जारी।
What happens when the game changes? You keep moving. You keep slaying. Keep celebrating. And if they keep talking,
Keep them talking.
because no matter how far you've come, you keep walking.
Ready for the next big IPO? Apply for it on Grow. Open your free Demat account, check all IPO details, apply easily in a few taps. And that's it. Download Grow now for stocks, mutual funds, and IPOs.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.
Welcome back. You're tuned into Buy Now Sell Now show, where we get all your stock-specific questions answered. The number is still flashing on top of the screens, and so is the is the QR code. You can scan it and send in your questions to us. Let's resume with the questions that you've been writing into us with. Hector D is writing in from Kolkata. He says he has Hoodco, the entry price is 236. He's been holding it for the last 6 months. He wants to know if he can hold it for the next 1 year, or what are the levels that he can look at profits. Next 1 year, Lancelot, he has Hoodco. He's sitting at a loss currently. Should he? Would you recommend a hold, and is 1 year enough time frame to hold Hoodco?
Basically engaged in the business of housing finance and urban development activities in India. So there is a tremendous growth potential because the government is focusing on development of urban and housing infrastructure projects, as well as trying to make new cities so that there's not too much concentration in the 4 metros. The stock is trading at about 1.8 times its book value. It has a market cap of 41,000 crores. We've seen over the last year, the profit growth has been good. And given that banks and institutions are also seeing good growth going forward with interest rates sort of stabilizing, I think it makes sense to hold on to the stock and maybe add some more if it's in a loss, because you will get returns over the next 12 to 24 months.
Okay, so that's the view coming in on Hoodco, the stock currently at 206 odd levels. But we also have Rengarajan, who has written to us from Tamil Nadu, and he has a question on IT major Infosys. Now, he holds about 290 shares bought at 1,063 rupees per share, and he's asking whether he should continue holding on to this position, exit, or accumulate at the current levels. Lancelot, let me come to you, because we've seen a lot of buzz around IT, especially after TCS reported its numbers last week. And we've seen some bit of breather as well in the fall. In fact, some stocks have risen over the last 1 week. What will your view be on the IT sector and on Infosys in particular, to answer the viewer's question? Lancelot, this question is for you. All right, we'll try to reconnect with him in just a bit. But in the meanwhile, Forum, if you can take us through your technical view on this counter.
Technically speaking, the stock price over the weeks, or rather, I would say months, we've seen it going just down. And as you rightly made a mention, in the past, say a week or so, we've seen a good rebound coming in. So the momentum is likely to continue, and we can expect the stock price to move towards the levels of 1160 to nearly 1200, where he can consider, in case if it's just from a very positional perspective, then consider booking some profits. And so far as an investment, it's yet forming a base. So I would suggest it's too soon to say from a long-term aspect to hold, but at least from a positional aspect, 1200 levels can be looked upon too.
All right, let's move on then to the next question. This is coming from Mr. Reddy from Hyderabad. He says that he has Bank of Maharashtra. The entry price is 85 rupees. Can he accumulate at the current price for the next 6 months? Bank of Maharashtra. He wants to know if he can accumulate at these levels. Forum, Bank of Maharashtra, it is. It has done, it's done quite well for itself. But after the correction that we've seen in the last 1 month, do you think that he could enter these levels, or should he wait for more correction?
Well, I would recommend to wait, because the stock price had already seen a very good rally since March, when the stock price from the 60 levels had moved up to almost like 90 odd levels. That's a gain of nearly 50%. Now, this correction also, we've seen it's technically right, but I would recommend to wait for at least around between 74 to around 77 levels to consider buying. Currently, the stock price is trading at 79, but waiting for lower levels between 73 to 77, even at 75 on an average, would be a good level to accumulate more.
That's the view coming in on Bank of Maharashtra. 77 could be a good level to accumulate more. But we have Anupam Malik, who has written to us from Kolkata, and he has a question on CESC. Now, the viewer holds about 1,000 shares bought at 165 rupees per share, and he's asking what is the target price for the next 6 months. Forum, what will your view be on CESC, the stock currently at 165 odd levels?
Well, actually, if we look at it in the past few months, that since May, the stock price has also seen a good corrective decline of nearly 20%, and now it seems to be consolidating or forming a base. From these levels, also from a 6 month aspect, I am expecting the stock price to see a very limited upside between 180 to around 185 levels, because I'm not seeing that kind of accumulation, or I would say a volumes that is supporting the overall bullish trend. So broadly, it remains into consolidation and can watch out for these levels of 180 to 185 in the next 6 months.
All right, so that was the last stock pick for the day. Thank you so much, Forum, for joining us. We'll let you go on that note and slip into a short break. Don't go anywhere after the break. We're getting you more updates on the market. Stay tuned.
Welcome back. You're still tuned in to Buy Now, Sell Now on ET Now. And let's put the spotlight on the real estate sector now. And we will talk about Raymond Realty in just a bit. And this is because there was a positive news piece on this company, which is why the stock has run up nearly 14% in the last 1 month. Several news pieces surrounding this company, but the latest development is with respect to a new project here in Mumbai. The company yesterday informed the exchanges that they've signed its 8th joint redevelopment agreement in Mumbai. This marks the company's entry into South Bombay with its first residential project in Parel. The company also informed the exchanges that the gross development value of this particular project in Parel here in Mumbai will stand at about 8,500 crore. So what does this mean and why is it important for the company? To discuss that further, we are now joined by Mr. Harmohan Sahni, CEO of Raymond Realty, who is now joining us. Mr. Sahni, morning, Ashesha this side, and thank you for taking your time out and joining us here on ET Now. So you have signed a 8,500 crore JDA in Parel, which marks your 8th joint development project here in Mumbai, and your entry into the South Bombay market as well. Can you share some more details on the project? When is the launch pipeline? What is the timeline looking like? And how does this strengthen your growth strategy, especially in the Mumbai metropolitan region market?
Yeah, sure. So the project that we have signed yesterday is an 8,500 crore sales potential gross development value project. It's in a very prime location called Parel, and it has excellent sea views from the property. It's an 11-acre land where we will be building almost 17 lakh square feet of carpet area. The project will be positioned as a very premium project. It will be a combination of Address by GS and Invictus by GS, which is our highest offering. This project will be a landmark project for Raymond Realty because it marks our entry into South Bombay, and South Bombay also has many micro markets, but this micro market we are very bullish about because it has the affordability, it has the infrastructure, it has all the connectivity to the primary employment hubs as well as the infrastructure like Atal Setu, Lower Parel, CBD, BKC CBD. So yeah, and we are expecting that we will be launching this project in the next 18 months or so. So by end of next financial year, we should be in a position to launch the first phase of this project.
Hi, good morning. This is Ankita also joining in. So after entering the South Mumbai market, which other micro markets in the MMR are you actively evaluating for your future JDAs, and what kind of pricing and customer profile are you really targeting for the Parel development?
So MMR has several micro markets, like I said earlier, and we have been focusing first on the primary CBD which Bombay has, which is BKC, and we've signed about 7 different projects around or which are very well connected with BKC. Of course, out of that, 1 project is in Kandivali, so that's a little away, but all the other 6 projects that we have signed are all around BKC. Now we are focusing on the CBD of Lower Parel, which also has significant employment, which is there, and connectivity, like I said. So anything around that is our next focus. And also Western suburbs is another area that we are looking at. So these are the markets we are focusing on currently.
Right, so that's as far as the latest launches are concerned. But following this edition, Mr. Sahani, what will the pre-sales guidance be for the next 2 years for FY27 and for FY28 as well in that case?
So pre-sales as well as the profitability guidance is already out in the market. We have given a guidance for the next 2 years that you can expect about a minimum of 20% growth on pre-sales. Last year we did about 3,000 crores odd number. And this year we are targeting a minimum 20% growth. So you can do the maths yourself.
Right. And with your portfolio now crossing the 52,000 crore mark of GDV, how do you plan to balance the rapid expansion with execution quality?
Execution has been the hallmark of Raymond so far, and that's one area that we have acutely focused on. So we've not operated like a typical developer who would look at land banking or keep on getting projects and not focus on execution. For us, it's the reverse. We have a manufacturing approach to this business since we are from manufacturing industry, and that's what we know best. So execution is the key, and each of our projects that we have taken on out of the 7 projects which we had already signed, this is the 8th one, Parel one, 4 have already been launched in a short period of 2 to 2.5 years. And 2 more projects will get launched this year, and execution of those will begin. That leaves out only one project, which is Kandivali, which will get launched next year. And it is expected that in 18 to 20 months' time, even the Parel project, which we are talking about just now, the 8th one, will also get launched. So execution is a very key focus. Quality is always, the Raymond brand itself stands for trust, quality, and excellence. And we will come good on that brand promise in every project that we do.
Okay, so that's the view coming in. But Mr. Sahani, because of the geopolitical uncertainty that we are facing right now, consumer sentiment has changed. If you can take us through what the current situation is looking like on ground with respect to consumer sentiment and consumer behavior, and has demand by any chance taken a hit as a result of geopolitical turmoil?
I think the market has completely bounced back. There was an element of fear which we noticed in the month of May in the markets. Markets literally got frozen for about 2 weeks, and it wasn't just in real estate. It was in other industries as well, even consumer products. And when I talk to my peers in other industry, they witnessed a similar trend. But by the 3rd week of May, the market started bouncing back. And what we are experiencing today in real estate, at least, is a complete normalization of that trend. So I don't think there is any fear factor in the market as of today. The news and the events have been fully absorbed and discounted by the market.
Right. Mrs. Sahni, I needed to understand the impact on the developers as well due to the withdrawal of royalty on minor minerals by the Maharashtra government. Any idea of how much of the cost would be saved?
See, it's a very good decision. It's a very welcome decision. But in terms of cost impact, it's something so minor that it won't be even noticeable. It's just more of a operational issue. And it creates a nuisance because it delays the entire process of excavation, and then the logistics of it becomes very, very tough to manage, because then the government will also get involved in policing of it. But the moment this goes away, it just adds to the ease of doing business more than the cost.
Okay, so that's the view coming in with respect to what the outlook is for the company going forward, and even when it comes to consumer sentiment and the impact of West Asia crisis. Mrs. Sahni, thank you so much for taking your time out and joining us here on ET Now and sharing your thoughts on what the outlook could be. But on that note, we need to slip into a very short break. More news and updates will continue on the other side, and we'll put the spotlight on the primary markets in just a bit.
Welcome back. You're tuned into Buy Now, Sell Now. Well, let's shift focus to the primary markets and the new kid on the block. We have Laser Power and Infra that listed on the stock market today. In fact, it listed at a decent premium of 17% on the NSE. After it was subscribed 38.94 times of the IPO, and of course, these shares, it was an issue of 742 odd crores, and the price band was between 203 to 214 rupees per share. So, a 17% premium is what Laser Power listed at. But let's get on board the management of the company to have a look at what is going to be the future for Laser Power and Infra post the listing. Amit Goyal, who's the CFO, and Devesh Goyal, who's the whole-time director and CEO, who's now joining us. Hi, good afternoon to you, gentlemen. Thank you so much for joining us. And firstly, congratulations for the listing. What is your ultimate strategic roadmap for the next 3 to 5 years as far as the scaling, of the product manufacturing and EPC verticals are concerned?
So basically, thank you for having us at the show. Thank you so much for the wishes. We have really aligned ourselves to the government's Viksit Bharat 2047 mission. And when we look at the kind of infrastructure growth that India is looking at, for every kind of power infrastructure development in India, we have the kind of products, we have the kind of qualification that is required to be able to execute such contracts and supply cables, conductors to various utilities of India. That is ultimately going to increase the capacity and the transmission and distribution capacity in India. Apart from that, we already know how utilities are now adopting energy transformation and energy transition into cleaner energies, renewable sources. Those power plants and also the generation power plants need to iron out the transmission bottlenecks that have been occurring in India. That is where Laser Power and Infra will be really contributing towards India's next growth in the country.
And just to add, as far as our strategy is concerned, we are going to manufacture a lot of special product and venturing into those special product, and as well as our EPC arm, we are going to strengthen it. So both way, we will keep playing in both spaces and capturing value since inception till installation of the products.
Right, gentlemen, morning, Ashesha this side. And Amit, my next question is for you. A significant portion of your revenue comes from government contracts and state power utilities. What is your current debtor pay cycle, and what steps are you taking to manage the working capital risks that are associated with delayed payments from these entities, especially the government entities?
So our government and private sector, both if you see our revenue mix is roughly 50-50, 5-10% here and there depend on a particular year. And as far as when you talk about risk from government receivables, so we don't see a single risk receiving from government in terms of money, because in last 10 years of our history, we never written off any bad debts. So that shows that is a confidence, and being the experience of the promoter in last 30 years in this space, we know how to work with which utility and which are paymasters in better way. So we keep with that strategy, and we never see a risk in those sense. And as far as receivable days are concerned, we see in government a little bit higher side, but it's end of the day, it's part of the game, because we are into B2B business, and that's definitely serve government as well.
Right. Also, business relies heavily on commodities like copper and aluminium. Given the ongoing global geopolitical tensions, do you have the complete cost pass-through clauses in your contracts to fully shield your margins from the raw material price volatility?
Yeah, so basically, if I may say, the Indian government and the utilities of India have given us a pass-through mechanism, which is called the price variation clause, in which the increase or the decrease of commodities are covered and are covered by the government. So we don't take that hit on us. That is how we are protected from the volatility of the commodities market. Apart from that, also we have our own hedging facilities which we really bank upon, and that is how we are planning our commodities.
And almost 95% of our contracts are passed through. So I don't think that's a big challenge, and commodity prices are definitely volatile, and it will work like that. Yeah.
And what is your target long-term revenue mix between your product manufacturing division and your engineering, procurement and construction vertical? What is the mix currently looking like, and what will it look like 4 or 5 years down the line?
Basically, till date, our manufacturing and our EPC revenue has been at around 75% of the revenue is coming from our manufacturing segment, and approximately 25% is coming from our EPC segment. We would like to keep it at that. That is a niche positioning that we've got. We really feel that this is where we are able to capture all the value chains as much as possible while producing our own products and getting them installed in various utilities. So we are going to keep the mix at that.
And just to add here, we see our EPC arm as a forward integration to our manufacturing product. So whatever we manufacture, we install it. So we take EPC project only where our product developed is being used, almost 50 to 60%. So that's how we keep it. So we take that as a forward integration to our business, and the mix can remain at 75-25. That's how we foresee.
Right. Also, you plan to use a major portion of the debt repayment. What will your post-listing debt to equity ratio look like, and how much interest savings will this generate quarterly?
So debt equity ratio would be quite good, will look like a very good, like below 0.1, 0.5 and roughly at 0.3 levels. And why we have chose to do this, because once your balance sheet become light, it give you a confidence to, capture growth for future. And that's how we decided to repay our debt and make the balance sheet light, so that there is a skin in the game. Even promoters would be still holding 75% of the equity, and that shows a confidence in the company by promoters and by other shareholders.
Future guidance that you'd like to give the investors going forward? Now that you're a listed company, you can also share your guidance for the next few years. What will that look like, and how will the company be positioned 5 years down the line?
So you see, in past 10 years, we have grown roughly by 28%, which is better than the industry. And in future, we tend to do so. So in similar, we expect a double-digit growth for sure, and that's how we are building on future.
What I would like to say is just the fact that in India, whatever infrastructure development is taking place or can take place, we are there, be it a small village where electricity hasn't reached till date, or a place like Mumbai or an Ahmedabad where underground cabling is the next transition that we are going through. The utilities and the governments, they want a wire-free city. That is how we are aiming to help India grow at every kind of infrastructure development that is possible in India.
All right, gentlemen, on that note, thank you so much for joining us, and congratulations once again on the listing. We'll move on and shift focus to ABB Global, that has delivered a strong second quarter with double-digit revenue growth and margin expansion driven by healthy operational performance. The company is also guided for a low to mid-teens comparable revenue growth in the third quarter. My colleague Snehi is now getting us a look at the key highlights of the earnings. Over to you, Snehi.
Well, yes, the stock of ABB India is seeing some lofty gains in trade today on the back of a robust set of earnings from its global parent, ABB Global, for their second quarter. Let's take a look at what these quarter two numbers for the global parent look like. The revenue has come in at $9,475 million, which is an uptick of 14% year-on-year. Operational EBITDA, EBITA, is up 20% on a year-on-year basis at $1,925 million. The order book is at least at a 2.5-year high, 2.5-year high for the order book, looking very solid over here at $12,042 million, which is an uptick of 30% year on year. The order backlog right now stands at $30 billion, which is an uptick of 28% year over year. The cash flow from operating activities is at $1,150 million, a very good uptick of 9% year on year. And the company has said that the free cash flow right now stands at $828 million, which is an increase of $36 million on a year on year basis. Taking a quick look at the segment wise order book growth on a comparable basis, electrification, very healthy move of 58%. Motion segment has also done well with a 20% growth. It's automation where we are seeing a degrowth of 14%. Geography wise, the Americas have seen 52% growth, looking good. Europe at 12%, AMEA at 12% as well. Within the Asian Middle East market, India has seen the most robust growth of 81% in terms of their order inflow, and that is why ABB India is doing so well today. China is up 10%. South Korea has seen a degrowth in terms of order inflows in the quarter gone by with a cut of about 8%. Some other major announcements for the global parent: they're going to be acquiring Rotok PLC in an all-cash deal of $5.5 billion, and this is going to be to increase its offering within the Sense Control Act automation loop. ABB is also going to be investing $200 million across Europe to accelerate grid transformation. ABB and Volta Grid extend collaboration on power infrastructure for data centers, and they've also announced the acquisition of Special Task Pro to support industrial electrification and specialized transformer offering. Lastly, in terms of their outlook going ahead, they're on track towards improving the previous year's annual free cash flow of $4.6 billion. This year so far, they've already clocked in $2.1 billion. They're guiding for low to mid-teens growth on a year-on-year comparable revenue basis for quarter 3. Operational EBITDA margin to show sequential improvement. For overall FY26, the comparable revenue will see low double-digit to low teens growth, and operational EBITDA margin should improve on a year-on-year basis, even when excluding the real estate gain in quarter 1 2026. So that's the outlook coming in from ABB's global parents. Solid numbers, solid order book positioning as of now. India has seen 81% growth is what the company has mentioned. On the back of that, ABB India is also doing very well.
The stock is up 8.5% on the back of that news piece. But shifting focus then to the fertilizer segment, where the government has now approved the National Investment Policy for Urea 2026, which is aimed at boosting domestic fertilizer production. The policy envisages setting up 8 to 9 new urea plants, assures returns of 12 to 15% for investors, introduces forest risk protection, and a more transparent subsidy framework to accelerate India's journey towards urea self-sufficiency. Meryl is now joining us with more details on what the stocks are doing in trade today. Meryl?
That's right. The fertilizer space will be firmly under the radar today after the centre has approved a new National Investment Policy for the year 2026, which is a policy aimed at making India completely self-sufficient in urea production. The government has said that urea demand is growing at a rate of 5% per annum, and under the new policy, a new 8 to 9 urea plants will be set up, together capable of producing 1 crore metric tons of urea annually. Just for some context, in the past decade, only 6 urea plants were set up, and this 8 to 9 new urea plants is going to be an incredible difference for the Indian fertilizer landscape. What's important for companies is that this policy significantly improves project economics as well. It assures a 12 to 16% return on investment for new urea plants and urea companies, introducing a more transparent subsidy framework as well, separating the fixed and variable costs. And it's also going to be providing forex risk management with exchange rate support and fixed exchange rate from the 4th year onwards. The government also estimates that every new plant under the policy could save over 250 crores compared to the previous 2012 policy. From a stock perspective, companies such as Coromandel International, Chambal Fertilizers and RCF are likely to remain in focus, as these are among the key players and the key beneficiaries from this new policy. Overall, this policy not only improves visibility on returns for fertilizer companies, but it also strengthens India's overall push towards 100% self-sufficiency in urea production, which is a quite important topic given the recent macroeconomics and geopolitical dynamics.
All right, with that, it's time to pull down the curtains in this edition of Buy and Sell. Now, Ashish and I will take your leave. Thank you so much for tuning in. Don't go anywhere. Markets at Noon is coming up next.